Hello there, this is FairBinaryOptions.com. We are looking at the Euro US dollar in this last trading day of November 2013, 29th of November, as you can see on the lower right of the screen. And we have a topping pattern, if I may say so. While this is not a reversal pattern, it is something to be taken into consideration, as the Euro US dollar on the 1 hour chart forms a rising wedge, or an ending diagonal, or a terminal impulsive move. Regardless how you call it, this one points to the downside. Does it mean that the move to the upside is done? No. It means that in light of this being the last trading day of the month, price hesitates at this high. So whilst still making new highs, it is hesitating. And if you take a trend line from trying to connect these highs here and to these highs here and project it on the right side, you are seeing that it is already pierced, it is already touched. We are going to have the CPI in Europe to be released at the top of the hour, and it remains to be seen how the market will react. Last time the CPI has been released has been 1 month ago, and it was 0.7%, and basically that was the trigger for the ECB to come to cut the interest rates 2 weeks or 1 week later. I am not saying that the CPI is going to come way lower than expectations, because it is already way low. Last time we had a print of something like 0.7%, so close to deflationary threats. But this pattern here looks to be a rising wedge that started from the lows here on the right side of the screen like this. And it advances with 5 different legs. This should be labeled like this: wave 1 here, then the second wave to the downside, either here or here or here, it doesn't really matter. Let's say that the second wave is done here. It is forbidden for the second wave to be a contracting triangle, so it can be any corrective pattern but not a contracting triangle. So let's say the second wave is done here, then so the 1 and then the 2, then we have a third wave to the upside, a fourth wave here, and the fourth wave to be done out of with a contracting triangle of a lower degree. If you look here like this, so this will be the fourth wave at the end of this triangle, and then of course the fifth wave to the upside and the fifth wave to the upside to come and pierce this line. So 1, 2, 3, 4, 5, rising wedge, and by this moment of time the pattern should be considered completed. Any rising wedge travels between the 1 and the 3 and 2 and the 4 trend line, and this one should be no different. So I would say that it goes something like this: from the second to the fourth wave like this. Trend line broken, now retested. Normally this points towards lower values. And you might say, okay, and what if on the CPI print now will come and the euro will make a new high? Is this pattern still valid? Yes, it is, because the advancing waves should come in the form of zigzags. So this, in the case that price turns and make a new high, it implies that the third wave was not done here, but the third wave actually was done here. So we have something like 1, 2, 3, 4, 5. And then the reversal. All in all, regardless if it is here the wedge to be done or will make a new high, we'll still want to buy put options for end of day expiration date today, as month end flows should bring the pair down, at least for a corrective wave. So the consequence when you trade binary options is to buy put options, because we are looking for the direction to be to the downside, and of course we should choose the expiration date with end of day expiration date. End of the expiration date should be today. By the time the New York closes, well, the New York is going to be on holiday because Thanksgiving Day, but the currency markets will be still open, and therefore, in terms of putting an hour to our recommendation, we should be put options with end of the expiration date, meaning 21 GMT. Thank you very much for being here. Again, this is fairbinaryoptions.com. Bearish pattern on the Euro US dollar heading into the CPI into this Friday, and as a consequence we are buying puts, end of the expiration date 21 GMT, and all these analyses are possible due to the help of our general sponsor, Lionel.